Hey business warriors, welcome to the show, and we have a tax video for you today. Now you may have noticed that yesterday at 1:05 p.m. the Dow Jones suddenly dropped. This is because of news that Joe Biden wants to tax capital gains at 43.4%. Now this was leaked out to the media by people familiar with the situation, whatever that means, okay? It's always like that. But yeah, it was actually in Biden's original tax plan that was released last year when he was running for office, so it is very likely that he could do this, basically taxing capital gains as income. So let's break down for you exactly what this means. The current rates of long-term capital gains are 0, 15, and 20%, depending on income. These are lower than the regular income tax rates that go from 10 to 37%. So what this means is that if you hold an asset, either a stock or a piece of property, for less than a year, you'll be taxed at the regular income tax rates. But if you hold it for more than a year and then you sell it, you'll be taxed on the profit at those lower long-term capital gains rates. And the same goes for qualified dividends. As long as you've held the stock for the required holding period, your dividend will count as qualified. Here's an explanation of that holding period. Common stock investors must hold the shares for more than 60 days during the 121-day period that starts 60 days before the ex-dividend date. I know it's a bit complicated with dividends and I often can't be bothered to work it out, but basically as long as you've held it for a few months, your dividends will be qualified. And you know, all this really makes sense because money invested is money that has already been taxed once as income, okay, when you earned it. But Biden wants to tax you again, okay? He wants to tax capital gains of people earning over $1 million per year as income at the top rate of 39.6%, which is actually the old top rate of tax before it was lowered to 37% in the Tax Cuts and Jobs Act of 2017. In addition to that, if you earn over $200,000 a year for a single person and $250,000 a year married filing jointly, you'll be subject to an extra 3.8% net investment income tax, which would take the total to 43.4%. Now, when asked about this policy, Jen Psaki did not deny it, and she went on to say this.
The president's calculation is that there's a need to modernize our infrastructure. There's a need to invest in childcare. There's a need to invest in early childhood education and making our kids and the workers of the next generation more competitive. And he should propose a way to pay for it. His view is that that should be on the backs, that can be on the backs of the wealthiest Americans who can afford it and corporations and businesses who can afford it. And his view and the view of our economic team is that that won't have a negative impact. There are alternative views, or there are proposals that don't exist yet on how to pay for it. That will be a part of the discussion. But he stays firm to his commitment to not raise taxes on Americans making under $400,000 a year, and he'll have a range of proposals on how to pay for his plan.
Notice what she says at the end there. We won't increase taxes on anyone earning under $400,000 a year. But wait a minute, I thought this was people earning $1 million a year, but this just shows that this isn't the only tax hike coming, okay? So there's that proposed additional payroll taxes on, originally it was people earning $400,000 a year. Now apparently it might even be families earning $400,000 a year. So for individuals it may be even lower. So just to show you that if you're not affected by this capital gains increase on, you know, people earning over $1 million a year, don't think that you're going to be unaffected by these tax hikes because there are a load of different tax hikes coming. Now on April 28th, Biden will address Congress on the American Families Plan, where he will give more details on, you know, what taxes are increasing and what he's spending the money on. Supposedly, this plan will include a proposed $300 a month for families with young children and $250 a month for families with children over 6. In my opinion, why not just tax them $300 less a month? Then they would get $300 without it having to pass through the whole government system and waste a load of money in the process. And if you want to make the system fairer in general, why not stop increasing the tax on the rich and start decreasing tax on the poor? Wouldn't it be great if you could take the capital gains rates and make them the new income tax rates? It would be amazing if people paid taxes at 0, 15, or 20% depending on their income. Now you would have some payroll tax on top of that, but it would be a much lower rate than what we have now. And then you wouldn't need to do things like giving people $300 a month if they have a kid or whatever. Yeah, it's not going to happen in this lifetime. Or this administration. All right, guys, that is my explanation on Biden's proposed 43.4% tax rate. Of course, it has to get through Congress, so details of it may change. Do pay attention on April 28th because more of his, details of what he's proposing may be released. Now, if you are interested in investing, why not check out the app Webull? You can get 2 free stocks for signing up and funding your account with my link below. You can trade stocks on there, commission free, and you can also trade crypto, and they've just added Dogecoin if you want to try trading that. It's a lot of fun. Don't take that too seriously though. All right, guys, please subscribe if you're new for more updates on, the ongoing tax plan shenanigans, and we'll see you next time. Bye-bye.